Good afternoon. Today's date is 1/19/2013, the month of January for the bull side of the markets. We're coming up here at 5.5 year highs back here in 2007 on the Dow. Remember, it's only 30 Dow stocks, and we have a lot of Dow earnings coming out. We know that growth is going to be a little bit lighter, but we've been rallying in anticipation that the earnings are going to be robust. This is the top pattern that we're looking at over here. There are areas we closed at 13.6, 49.70 at 53 handles. What I will show people is the upper end here. We have a 13.731 area that goes right across this ridge of this half bar and this big red reversal bar that goes back to the 2007 financial crisis. That's the upper end of the resistance levels. The other thing about the Dow is that the Dow is getting fairly overbought within this calendar bull month of 2013, January bull, meaning that when the fiscal cliff came off, this is what it would look like. And I talked about how could the Dow go 1,000 points higher or 1,000 points lower. It didn't matter. What did matter was what the volatility, and we started the year out and we're up toward the highs, and and this is a monthly level, and we've come all the way back up here. And let me tell you one thing, we are much higher than what the 2012 top reversal was. This is where it was back in time. What used to be support over here before it broke down on the monthly chart in 2007 was your wall of resistance with pullbacks and then great rallies back up. Now we are entering this part of the process at 13,731 up there. What I will show people here carefully is there's going to be a lot of volatility that comes to these markets. Here's 13,500. It's going to be right up here toward this area of the monthly area, slightly below where it started. If we were to go right up, that's 13,938.53, right up here where that monthly swing was, and then that's the financial crisis that started over here. Right now, the Dow has broke this major body, monthly body in price here, and we're up above here, meaning that we're higher. And it all has happened in one calendar month with the fact that there's going to be this big resolution with the government. We're going into the Dow earnings. It's starting. We see where bonds are in a bubble, and that because of the bonds are in the bubble, there's been $22 billion of inflow in equities, and money moves out of bonds and goes into equities, and that's what can push us up higher. But let me caution everyone in the Dow, is the market willing to read through the lower earnings on a percent level that are going to change in calendar 2013 in this quarter that is starting on Tuesday and the following quarter, the first 2 quarters of 2013? To get to the higher resistance levels, they're going to have to look through that. We know that the debt ceiling, they're going to come to an agreement. Look at as far as what the government does and debt credit ratings and all of that, let it be what it is. Right now, we're making bull top highs based on the market looking through and looking past and looking forward, and that money comes out of bonds and fine homes and equities. And that's going to include the Dow, that's going to include the NASDAQ 100, it's going to include the broader equity side of all of these exchanges in here. And that the pullbacks in the earnings cycle is with a bull run starting. We're going to get volatility. We'll have some reversal volatility in there, just like we always do. When we get big 2-month reversals here and we get 2-month reversals here, somewhere in this calendar period, we're going to get some reversal, all right. Because in the short term, the Dow is pumping to overbought resistance levels, which will be harder to take it through there. But buying dips is how the market is willing to discount a lower level of earnings. And this is going to be the top. Here we are right here. I'm just going to blow this up so you can see it. It'll fit in here. Here is that monthly red bar. That where it all started. And markets, just like in any other calendar decades, they like to come back up from their financial crises. A lot will have to change. It's early in the game, other than you have a straight parabolic monthly bull run in calendar 2013 on the Dow, and it's 30 stocks. And each one of those stocks will have to have their earnings coming out in this quarter. There will be some volatility. Buy the good quality. We're overbought level. We can go up here, but the higher that we go, the more overbought and the harder the resistance levels the Dow will have. This is the Dow update. There's going to be lots of headlines. There's going to be lots of Dow components reporting their earnings over the next couple of weeks. In this particular quarter, their forecast, worldwide markets, people believe that worldwide, you're pumping massive liquidity in the system with Federal Reserve bankers around the world, including the one that we have here. And when we start the year this bullish, parabolically up, we will have pullbacks, and the earnings cycle will cause that. We can see where the big red monthly reversal bar is. And I will draw another trend line over here for the MMTs because you're using our application, and this is just a standard chart. We're just doing this for the sake of that you can see what the standard public thing looks like versus our platform, and that our numbers on our platform will differ in here a little bit, but they're close enough. And basically we're at multi-year highs going into an earnings season. Does the market want to look past short-term lower growth? They got the financials working, they got the transports working, they got lots of things working. However, spending cuts and government volatility, we went through that whole thing this last year with the fiscal cliff crap. And right now, we've got areas of resistances that are going to happen. Here's another one at 13,800. And the higher that we go, the more short-term overbought we are, and the more volatility that the earnings stocks can drop, gap down. They're going to have what they feel what the quarter is looking like. There's been some positive economic data that stimuluses have created, but nonetheless, beware about the Dow and its upper end of the resistance levels because you want it to be a buyer at the lows. When you're buying up here in the highs, you have a lot of risk.